Bitcoin is going to become more scarce than gold, because unlike gold, Bitcoin cannot respond to an increase in price and mine any more than is mathematically metered now. Gold, however, can respond to the increase in price that it has enjoyed. And we are seeing new mines opening up, the higher cost mines, to try and get more supply out. And I think people are beginning to understand this distinction when it comes to scarcity value. It's a global rules-based monetary system, really the first one since the U.S. closed the gold window in 1971. That's a very big idea. And it is a new asset class, and it's that last phenomenon or revolution that is beginning to take hold now.
Cathie Wood starts out by highlighting a profound change in the energy and transportation industries that is being fueled by the convergence of artificial intelligence, autonomous technologies, and electric vehicles. According to her, we are on the cusp of a new industrial revolution in which intelligent self-driving platforms, rather than just electric vehicles, will replace the conventional automobile. As a data powerhouse as well as an automaker, Tesla is at the center of this shift. She believes that Tesla will be able to undercut the pricing structure of both tech competitors and conventional automakers because to its superiority in real-world data and AI hardware. Cathie Wood is wagering that Tesla will serve as the foundation of the global autonomous transportation network, which is now about more than just selling vehicles. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Or when they thought about AI, their first response was in the chip sector, so NVIDIA, TSM, and we think they'll be fine stocks, but we think the bigger opportunities, meaning they're not as well understood, are in the embodied AI space. And by that we mean AI as it impacts the physical world. We think the biggest application of AI is in the autonomous mobility realm. Many people know that as robotaxis. And we think that is, during the next 5 to 10 years, that will scale to an $8 to $10 trillion opportunity globally for the entire ecosystem, with the biggest beneficiaries, the network providers, accounting for half of that, so $4 to $5 trillion in revenue from essentially nothing now. The biggest robotaxi network out there, we believe, will be Tesla. Now, it is not yet. Waymo really has that. I would say has that mantle, but we believe that Waymo's solution is too high cost, and that it will give way to Tesla's lower cost solution over time. We think that the autonomous opportunity will submit to natural geographic monopolies. We don't know who that will be in Europe or China. We know Pony AI and others are going for it, nor do we know what it will be in Japan. We know that Tesla would like to enter those markets, but in this world, it's winner take most. The company getting passengers from point A to point B the fastest, the safest, and the least expensively is probably going to win. So lots of markets are up for grabs there. So that's the first embodied AI opportunity. The second is in healthcare. We think that the most profound applications of AI during the next 5 to 10 years are going to be in healthcare. We see already that there are diagnostic tools, diagnostic tests that are able to identify and diagnose cancer in stage 1. We're seeing this in one of our private companies, Freenome, able to use blood tests to diagnose colorectal cancer in stage 1. We have other tests out, the testing companies out there, Exact Sciences, Guardant Health, also in the run for that competition. We see research and discovery being transformed by AI. AI is going to shrink the time from conception to market to create a new drug from 13 years on average now to 8 years and ultimately 5 years, we believe. And what's been very gratifying here in the United States is the FDA, the top regulator, is aiming to help with that process. So it is blessing the use of AI in research and discovery. And we also think that the cost of discovering a new drug, including all the failures, will drop from $2.4 billion for one drug down to $600 million, which is going to transform healthcare. And then the third general category that we think is going to transform healthcare is curing disease. So the convergence of various sequencing technologies with artificial intelligence and new technologies like CRISPR gene editing and other gene therapies is already starting to cure diseases, sickle cell disease and beta thalassemia. So CRISPR Therapeutics has launched those two products, and they have already started generating revenues and curing people. So these are profound changes that we don't think investors have priced correctly into the market yet.
Turning her attention to the financial sector, Cathie Wood offers a compelling viewpoint on Bitcoin that she feels represents a sea change in the technology's path to widespread use. She believes that this marks the start of the institutional era of Bitcoin with the introduction of spot Bitcoin ETFs, such as ARK Invest's own ARKB. Three significant innovations, in her opinion, are what make Bitcoin so appealing. It is a revolution in technology to start. Bitcoin is the next step in the development of the internet, incorporating virtual currency into a worldwide, decentralized system. A new asset type with inherent scarcity is Bitcoin. Only 21 million Bitcoin will ever exist. It has an even higher scarcity premium than gold because of that tight limit. Cathie highlights that with its most recent halving, the supply growth rate of Bitcoin is currently barely 1% annually, which is even lower than that of gold. Additionally, Bitcoin's supply schedule is set by code, in contrast to gold, which reacts to rising prices by encouraging more mining. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
I think what is happening here, it started with the spot Bitcoin ETFs. We're very proud to have one of the largest here in the United States, ARKB. That began the institutionalization of Bitcoin, the Bitcoin market, and other crypto markets, other digital assets. And I think many people are now tuning into the arithmetic. I actually posted on X, math is math, and math is mathin'. And what that means is we're at right now roughly 21 million units, or Bitcoin, having been mined in history. And that number is only going up to 21 million. It cannot go beyond that. And so I think more people are doing the math and saying, oh my goodness, this is a new asset class. I, as an institution, don't have much exposure. Bitcoin has the most secure network, and it's taking advantage of three powerful revolutions. It's a technology revolution, really the next generation of the internet, putting the native currencies into the internet. The developers did not do this in the late 80s, early 90s when they were evolving the internet, because they didn't know that finance and commerce would take place on the internet. So that's a revolution. It's a global rules-based monetary system really the first one since the U.S. closed the gold window in 1971. That's a very big idea. And it is a new asset class, and it's that last phenomenon or revolution that is beginning to take hold now, because there's real scarcity value. 1 million more Bitcoin will be mined, and that's it. So scarcity value is scarcity value. And the most interesting thing about Bitcoin is after the halving last year, which means the supply growth of Bitcoin was cut in half, to roughly 0.9% on average per year. That dropped the supply growth of Bitcoin below the long-term supply growth of gold. And a lot of people understand the scarcity value when it comes to gold. Bitcoin is going to become more scarce than gold because, unlike gold, Bitcoin cannot respond to an increase in price and mine any more than is mathematically metered now. Gold, however, can respond to the increase in price that it has enjoyed, and we are seeing new mines opening up, the higher cost mines, to try and get more supply out. And I think people are beginning to understand this distinction when it comes to scarcity value.
Cathie Wood emphasizes that although her organization is not yet heavily involved with Bitcoin, she thinks it is based on the safest network available and is utilizing 3 significant revolutions that will change the way that technology and finance are developed in the future. By incorporating digital currencies into the online realm, Bitcoin embodies the next generation of the internet, marking the first technological revolution. The enormous importance that banking and commerce would play online was not foreseen by the early internet pioneers, but Bitcoin fills that void. The establishment of a global monetary system based on rules is the second revolution. Bitcoin offers a decentralized substitute for conventional money systems and is the first really worldwide monetary standard since the United States abandoned the gold standard in 1971. A new asset class with intrinsic scarcity is being created, which is the third revolution. The remaining 1 million Bitcoin is a limited resource, more scarce than gold, since only 21 million will ever be mined. Bitcoin's supply growth has slowed to just 1% per year since the most recent halving, which is less than gold's long-term supply growth. The fixed supply of Bitcoin reinforces its deflationary architecture, in contrast to gold, which may be produced more as values climb. Although it is still difficult to forecast the price of Bitcoin in the near future, Cathie notes that growing institutional interest has increased her confidence in the cryptocurrency's long-term growth. Her company projects that the price of Bitcoin will reach $1,500,000 in 2030, which is more than 10 times its current worth. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.